Good day. This is your European mid-session briefing for Thursday, June 23rd. My name is Michael Florentiades. I am the chief economist here at XM. Here are the key points during this European session that you have in mind, you should have in mind. The UK's EU referendum has started and the markets are discounting a Remain outcome as we are speaking. We will have a look at that in a second in more detail. Eurozone market PMIs, business confidence indicators, come in mixed. The US dollar is having a tough session, and Chair Yellen, with her testimony the previous 2 days, certainly not helping the US dollar. And for Canada, we have mainly US data to look forward to in a little while, such as US jobless claims, market PMI manufacturing, and new home sales. On to sterling. Pound dollar made a new 6-month high at 149.46 as markets are clearly pricing a Remain result. Now, are the markets rushing to price the outcome? Is this an accurate indicator we can count on? It's impossible to say, but you should know that if by any chance the markets are getting it wrong, then there will be a lot of volatility, a lot of volatility. Now, on the other hand, if as expected Remain does prevail, how high will the pound go? It's difficult to say. It's possibly top heavy. Personally, I think 150 is going to be a tough nut to crack for sterling. Maybe in the enthusiasm of if Remain does win, and in the enthusiasm, maybe we will get above 150, but it might not be so. It might not be so easy for the pound to keep those levels. Maybe if there's some help from a weak dollar, but we shall see. So, and again, you should keep in mind, is this a buy the rumor, sell the fact situation, or is it thin markets? Markets could be moving in a quite a volatile fashion. In the absence of news today, we know that a lot of institutions, a lot of traders are very, very hesitant to get in the market today. They want to see the uncertainty lift before they become bigger, before they participate. So maybe it's thin markets driving this move, we don't know, and certainly something to watch out for. Similarly, we are seeing a 3-month low for euro pound. As you can see, the euro is also benefiting a little from this situation, and the polls are favorable for Remain and for the pound. On to today's big news during the European session. It was the market Eurozone PMI releases. As you can see, an overall perspective is that the PMI is stable above 50. We have positive prospects for the coming quarter, so we're likely to get steady GDP growth. You see around 0.5%, maybe a little less. Probably a little less, actually. There are some political uncertainty worries overall. And here we're comparing Germany and the periphery versus France. France is the orange line. Germany and the periphery are doing better. They are comfortably above 50, whereas France, it's more of a struggle. It's had a dip because of strike action. Now, the euro is staging an early relief rally from referendum worries. I didn't see the PMIs affecting it that much, but it's probably the euro is joining the anti-dollar trade. We see the dollar getting hit across the board. Of course, maybe the trade weighted index is not the best place to see this, as it's more or less trades as an inverse euro. But we have 3 possible reasons for the dollar drop. If Brexit concerns are indeed receding, then there will be less demand for the US dollar. The US dollar, despite some selling it has receded, it could be said it's a relative safe haven from Brexit woes, despite we said that mainly it's the yen and the franc that are benefiting from Brexit woes. The dollar too is the world's reserve currency of the largest economy, so maybe you can say that it is a little sheltered from what's going on in Europe. Now, the other point is that Yellen did sound relatively dovish the previous 2 days, making a July hike even more unlikely. And finally, we have this point that we do have thin conditions in foreign exchange markets today, which could be exacerbating moves, and it's difficult to tell whether the moves are reflecting real changes on the ground or if they are reflecting the fact that liquidity is so thin today, with so many market players putting in place precautionary measures. Later, we will have the US data in sight, jobless claims expected to dip to around 270,000. We are going to get the manufacturing PMI flash from market, expected to climb a little to 50.8 from 50.7 the previous month. And finally, we have new home sales that are expected to drop from the previous month. During May, they are expected at 0.56 million new homes sold. And tomorrow, just keep in mind, we will have the IFO German IFO business sentiment survey. Just to wrap up, please keep in mind that the polls in the UK close at 2100 GMT. One or two exit polls might be released after that. It's said that YouGov is going to go ahead and try to call the referendum's final result. Turnout will be key. If it is a high turnout election, then that will be favorable for Remain. If turnout is low, good for Leave. The bulk of results will be between 100 and 300 GMT. There are key regions that will be watched for results, for some indications, regions that are known to be either pro-Europe or Eurosceptic. This can be found out from some polling that was carried out. If one region is strongly pro-Remain or pro-Leave, what the results are in this region is going to tell us a lot. Now, if the result is close, it could drag on to 300 to 400 GMT, despite the fact that the markets and possibly the bookmakers are calling it early. There have been some big surprises in UK elections recently, so it's best to wait for the result. That's all from me. Thank you very much for watching this update. Have a great day.